range. So how can you make money in the global sell-off? We did see this play out on the JSE. The last 2 days we were down more than 1%. Well, Brigid Taylor, she's the chief executive of Intrepid Capital, is here to give us some insight. And of course, I'm still joined by Gary Boyson, who is at the desk with me. Brigid, this volatility that we've seen and the sell-off that we've seen, what are maybe some of the factors that we should be looking at that are most likely to spark such movements in the markets?
Well, I think that there's a couple of things. So if we look at the high level, it's really about a global move. And right now, the big consensus, as you mentioned earlier, Gary, is what is the Fed going to do? So the US data is important. You were talking about non-farm payrolls. It's one of the key indicators that the Federal Reserve's used as a litmus in terms of when they will be prepared to hike interest rates. So they looked at job creation and they looked at inflation. They said they want inflation around 2% and they want unemployment sitting at around the 5% mark. Unemployment's looking good. Unfortunately, non-farm payrolls has been a little bit volatile. So we saw last month 134,000, very much off the mark. This month we're expecting around 234,000. It is a hit and miss, but one of the other factors that came out last week that was very interesting was the trade deficit number, because that came out on Thursday. And the trade deficit number showed you that the United States economy was battling because they've got a very, very strong dollar. So the export market was struggling. Imports are much more prolific, so their trade deficit widened. That the market actually punished them for. So these kind of numbers speak to what's happening in the US, because everybody's waiting to see whether interest rates will be risen in that economy, because the global economy relatively is benign. I mean, you look at Europe, almost at zero rates. You look at the emerging markets, kind of benign because China's not growing. You know, you don't have exports into the Eurozone. If you look at South Africa specifically, our export sector's under pressure. Imports, we're still a net importer, and our rand is weakening. So those are the kind of factors that you need to keep an eye on. Obviously, this week it's also been around what's happening with Cameron, whether the Conservatives are going to win. It looks as though that's in play, so that's positive. And the other big key to keep an eye on is what's going to happen with Greece, and are they going to repay?
Okay, so we do have the US Fed. You've got political dimensions that come into play. So definitely global events play a very big role. Gary, I think you can jump in.
Yeah, I'm interested to hear, like, you're talking about the Fed. I mean, what did you make of Yellen's comments the other day saying that equity market is a little bit overheated in the US?
Well, I think that she's concerned that the dollar is a little bit too strong, because as you saw with that trade number, we're seeing that the US economy is struggling to get momentum. So you're seeing certain data numbers like housing purchases are picking up because interest rates are so low. So they've kept the interest rate low to try to encourage investors and certainly the consumer there to create jobs, to spend their money, to create that inflation, which is actually the issue that they're battling with at the moment. So they're not seeing they're seeing a bit of growth, but they're not seeing the inflationary impetus, which is what they're hoping to see. And if you look across the globe, I mean, even in South Africa, we're seeing our inflation sitting at sub 5%. That's interesting. You know, that's in a scenario where the rand's a lot weaker. You know, we've got this pressure from the unions, etc., in terms of business trying to cover costs in terms of productivity. So I think that one of the interesting factors is, I mean, the last week and certainly in the last month, we've seen a big sell-off in the bond markets. Yes. Now, the bond market has been as a function of, if interest rates are going to be hiked, do you want to be long of bonds? No. You're going to go short of the bonds and take profit. And what we've seen across the curve, so whether you're looking at German bonds, they're sitting at 0.8, which is the highest levels they've been at in a while. The US Treasuries are sitting at 2.15, which is higher than 2%, which is much higher than what we've seen in a while. And the South African bonds. But then what happens is they start to offer value again. So people come in and they say, right, at these levels we're comfortable to buy. So what you're starting to see is that people coming back into the bond markets and reflecting those views. And I mean, I don't know how you feel about this, Gary, but I've often noticed that in the South African market, a lot of the investors in South Africa, because of possibly the exchange controls and unsophistication, a lot of investors always express their view around the stocks, where they're very nervous about expressing views in currencies and bonds. And maybe it's been as a function of the fact that there hasn't been a lot of listed products that they could actually participate in. However, now that market's opening up, and it's interesting to me that you know, I'm starting to see more and more appetite for guys to diversify their portfolio and say, okay, let's take an interest in the bond markets, but as a hedge against our equity portfolio.
No, definitely. I think you're 100% right. I think in South Africa at the moment, the products available, especially to retail investors, are not there in the bond market. I mean, the entry criteria is very, very high. I mean, you're talking millionaires can invest in the bond market. You know, the average retail investor, I mean, there just aren't products to cater for them.
To buy a bond is going to be $1 million, right?
There we go. Now, I mean, you know, that excludes a vast majority of the people that, I mean, especially the initiatives that the JSE is making at the moment with things like the retail savings account. I mean, trying to target, you know, sort of lower income people and help them make savings. I mean, the bond market's not really a viable option for them to invest in unless they're going with South African retail bonds, something like that.
But you can express your view if you do, you know, I mean, I look at people that have got, I mean, all of us have a mortgage. You know, we've got mortgage outstanding. We're sitting at lowest interest rates that we've possibly been in a while. How do you hedge that as a South African? Whereas an offshore investor can hedge that.
Yeah.
So, you know, things like the Albi. You can trade the Albi, that's the All Bond Index. You can trade the Govie, which is the government index. So that then hedges your interest rate move so that you can put something on the back of your house mortgage. So if interest rates do go up, at least you're offsetting some of that loss that you're going to experience.
Brigid, I just want to jump in there. With the Albi and the government index, you just mentioned that it's very hard for a retail investor to get in.
The exchange. So you
I
can
can
buy
do
it
it
as
on
an
the
index on the exchange.
ETFs listed on the back of them, which
Okay,
is
so
a way
that's
that you can get in. Yes.
Okay, so that's one way.
But just out of interest, I mean, there's so much talk of a bond bubble at the moment as well. Obviously, you know, don't fight the Fed. Fed's buying bonds. You don't you know, fight that at the moment. You get interest rates, so you're not seeing a mass of the popping of the bond bubble coming. I mean, or is it really still a matter of all these central bankers have the bazookas in their arsenal and that this can still carry on for a while?
Well, I think that it's almost like your equity market. So if you know enough about the bond market, you can pick and choose along the curve. So you could say, I like the 10-year, I want to trade the 186, or I want to trade a spread between 186 and the 15-year, or whatever. So you can, but then you've got to be more sophisticated and you've got to know 100%. What you're doing. Okay, you can do that in terms of doing it on a futures market. So as a retail investor, you've got to pay more attention. So it's like somebody on an equity decides to buy Barlow's, decides to buy a bit of Harmony, or does he buy the gold index, or does he buy, you know, the resi, or does he buy the industrials? So the same applies with the bond market. You can say, I'm not 100% sure how that works, but I do recognize that there's this is an opportunity to hedge. So I buy an all bond. That reflects the South African bond market, which effectively reflects the interest rates across the curve as a mean. And that gives me an opportunity to offset some of the, I mean, we all have some form of risk in terms of our interest rates.
What about the currency market? There have been interesting moves happening there. How do I make money out of that?
So the currency market, look, it is the most liquid market in the world. However, it is also one of the more volatile markets in the world. But you can do it where you're not spending a fortune. So in other words, you can spend a couple of $1,000 and take a view on the, you know, where you do, as you do with equities, if you want to buy a single stock future, you can buy a currency future. And what that basically allows you to do is, especially if you're exposed to an overseas trip, if you're exposed to an import, if you're exposed to something where you're not sure how to, where you want to more, robustly manage your hedging. Because traditionally in South Africa, what people have done is that they've hedged themselves on the forward market. So you've had to have credit lines with the bank and you locked in at that rate. Whereas the rate may and may not move. As you've seen, I mean, in the last couple of weeks, Rand's moved from 11.75 to 12.25. So there's opportunity therein for people to make decisions around that and be more robust, but then you do need somebody to advise you and you need to be actively involved. You can't be somebody that just, and it's the same with the stock market, you can't expect to make money in these markets if you're not paying attention.
Closing comment from you, Gary.
No, I think it's wonderful. I mean, you know, like FX these days, I mean, you can get currency, like you say, hedging accounts where, I mean, it happened to us the other day where, you know, you needed to get an account open. We were moving money offshore for a client, but the offshore provider was taking time to open the account. You can take a simple Forex account, put your hedge on. It literally will cost you a couple of pips, and you can lock in your rate. I mean, we were locking it in at, it was a rand dollar trade. We were locking in it at sort of 11.80, and it costs you next to nothing to do.
He's
so
loving you now, 12.12.
And there you go. And I mean, if we had to wait for the account to move it up, but we had that facility just to immediately hedge it for next to nothing. I mean, and every retail investor, that's completely different to the bond market. Any retail investor can open themselves a currency account for, I think it's 5,000 rand.
Lady and gentlemen, thank you so much. It's been great. I've been sitting here listening and learning. Thanks so much to Brigid Taylor. She's the Chief Executive of Intrepid Capital. Is that how I say it?
I'm actually at K-On Capital, but it's fine. I'll forgive you today, Tim.
Well, you at?
At K-On Capital.
K-On Capital.